Have you been looking for something new and different to learn about, invest in, something that is quite futuristic, actually? I have a great show for you today, something that maybe you've never heard of before. Your relationship with money matters. I'm Michelle Perkins, and this is the Money and You podcast, where I will be breaking down your relationship with money, offering tough love money tips, and a money dating plan that will focus on lifting the barriers to success to help pave the way for better money practices and increased wealth. It's time to take control to live a limit-free life. It starts today. Hello, and welcome to the Money and You show. I'm Michelle Perkins, your host, and I have such a fun show for you today. I had the best time speaking with Louis O'Connor about investing in strategic metals, something I know nothing about, and I was pretty riveted to the conversation, I have to say. So I'm super excited for you to hear him speak about this, and I think some light bulbs may just go off for you on how you want to expand your portfolio. Louis O'Connor, founder and principal of Strategic Metals Invest, is going to be here today. They're the only industry supplier in the world to offer private investors the option to purchase and profit from owning strategic metals. The investment play is exactly the same paradigm as investing in precious metals. Instead, the investor is purchasing strategic metals. So I'm going to let Louis come on and talk about this some more. Welcome.
Thank you, Michelle. Thank you for having me. I'm delighted to be here with you.
Super excited to have you here. I really was fascinated by this. We talked, I got off the phone, I told a couple people, including my son, about this. And so do you want to just kind of, I guess we'd love to hear a little background because you haven't been doing this from the beginning. So how did you get into it?
Okay, so as you know, I'm coming to you from Ireland. We're based in Europe. It's a European company. I returned actually. I had grown up in Dublin, but I lived in Germany for 10 years. I was in Latin America and Central America, to be precise, for 15 years. But I actually returned back to Europe to become a partner in this business. I heard about it. Actually, I first heard about strategic metals in the US. I was at in Las Vegas at the Freedom Fest. You may be familiar with it, and I met a gold person there who told me about this German company who offered, strategic metals is sort of an umbrella term for rare earth metals, but they're also known as technology metals. So they're in anything to do with modern technology. Energy transition metals as well, defense metals. They all sort of come under the same umbrella term of strategic. Basically, what they are is they're the raw materials that are sort of the backbone of manufacturing in the 21st century.
Yeah, this was fascinating because we don't really think about those. We think about the products they're in. We don't think about those components so much until we run out of them. And, we did experience some shortages in things. So we have a little bit of a window into what that's about. So can you give us some examples of some of these and what we might find them in?
Sure. Look, I'll just grab my phone actually, because it's a good example there. As you said, we touch them, see them, feel them every day, but we might not realize it. But like one smartphone has 12 rare earths. Some have 13, but 12 or 13. And all smartphones have a little bit of gold, so they have little micro doses. They also have some silver, but there's another 10 rare earths that are in a phone. Like you couldn't swipe your phone without indium. Also, the magnet in the speaker would be one of the rare earths. Now, those same metals that are in your phone, though, have many applications. Electric cars, solar power, wind power, medical devices. Wearable medical devices is a new sort of a growing industry as well. That's one of the future. Jet engines, nuclear rods for nuclear reactors. The burgeoning sort of aerospace industry they're needed in. So, it's probably easier, Michelle, to say there's not an industry that they're not in. And they sit very comfortably in a portfolio along with precious metals or real estate. It's a relatively new asset class for private investors. I mean, people are probably aware they can invest in, a rare earth mine. There's one in California, Mountain Pass in California, produces rare earths. Unfortunately, they have to send all the raw materials to China to be refined because China processes and refines 90% of the world's rare earths. We'll probably talk more about that in a minute. But it's a relatively new asset class for investors to be able to physically own them. And the reason for that is we're the first ones to do it. Relatively new. What I mean by that is we began in 2010 to offer rare earths to private investors, mostly in Europe because we're based in Germany. We have an office in Frankfurt and we have a vault in Frankfurt. But it wasn't exclusive to Europe. It's just we started there. There's about 100 million people just between, say, Germany, Austria, Switzerland. So that was a good enough market to begin. But we're sort of growing the business, expanding the business. We're going to build a second vault. And without doing any sort of advertising, we managed to have about 200 clients from the US anyway. So I'm sort of actively, that's why I'm happy to be chatting with you, is, I'm reaching out a bit more to North America, to get the message out there about rare earths.
Yeah, I found it fascinating. And there are a couple of things that you mentioned that I would love for you to elaborate on. There was a great story you told me about why all the refining is needing to happen in China. That was one. And then I'll let you answer that, and then I'll ask about the other one.
Right. Well, I suppose what people would want to know is, like, is it profitable to own them? And it is, and historically it's proven to be anyway. And what I'd like to sort of explain is why that is so. Rather than just say, oh yeah, you can make X amount of money or whatever. So it's a very sort of interesting dynamic what happened. So I'm going to just go back quickly in time to the 1980s. At that time, the US was the dominant market leader in rare earths. They were producing 60%, 70% of the world's rare earths. China was producing maybe 10 or 12%. Now, bear in mind, in let's say the middle 80s, technology hadn't really taken off yet. And mostly rare earths were, they were probably used in color TVs predominantly. This is just before we hit the sort of internet age, But what we see now happened was two things. One, China understood before Europe and before the US of what was coming. They knew, they could see that rare earths would be the backbone of manufacturing in the 21st century. And they decided to sort of get ahead of the game. So what they did at the time was they actually partnered with different producers, and they legitimately moved all the refining to China. Now they did this over a number of years, but at the time the US government is pretty much on record with saying, look, this, the extraction and the separation and the refining of rare earths, it's a bit messy, it's a bit complicated. Why don't we let China do it inexpensively? And then our manufacturers can buy the raw materials cheaply from China. So that sounded like a good idea at the time, right? But, all of a sudden then the whole, technology industry just, took off over the next 10 years. Now, at the time, the US, I'm speaking, Europe is in the same boat, by the way. I'm speaking about the US because, your audience is North American. But at the time, the US set up, they wanted to make sure they remained competitive. They set up the Bureau of Mines to keep an eye on things, to make sure China didn't just run away with it, which they did. But what happened then was in 1996, the Bureau of Mines was sort of defunded and has only existed on paper ever since. And literally since then, China has completely took over rare earths. They refine 90% of the world's rare earths. Wow. I mentioned to you there, Mountain Pass in California is producing, but they have to send all the raw materials to China to be refined because the engineering expertise and the human capital is gone from North America and Europe. It doesn't exist. And this is a crazy situation to be in because rare earths are critical to all nations' economic prosperity and increasingly military capabilities. And I'll just give you finish with this, Michelle, just to give you some context. You'll hear, it's funny enough, maybe not funny, but in a very rare occurrence of agreement, both President Trump and President Biden recognize America needs to wean its dependence off China. And they both signed executive orders. And there's now, things in place for the US and Europe as well to, have a different supply chain eventually to China. So you'll hear the US Department of Defense is going to build a refining facility with Lynas Corp from Australia in Florida.
Wow.
You'll hear of sort of private investment. But the reason it's such a good investment now and over the next sort of 10 years is China didn't get where they are overnight. They're a generation ahead of the rest of the world. And to give you an idea how long it's going to take to catch up, right? China has 39 universities graduating degrees in, critical minerals like metallurgists, geologists. So China's graduating about 200 degrees a week, 2 metallurgy degrees a week, every week for the last 30 years. The US has a handful of universities with these degrees. They're probably graduating 200 a year. To give you some further context on that, and these estimates are from the industry, China has about 400,000 people working in the rare earth industry. The US has about 400. And Europe is no different. So that's sort of where we are. China controls rare earths. Demand is surging, particularly now with this energy transition for electric cars, solar power, wind power. And Europe and the US and Japan are pretty much waiting in line for what China will sell after they satisfy their own domestic quotas, or, they're sort of threatening again to restrict exports. There's trade tensions, and if things escalate with Taiwan and things like that. So either way, if you hold them as an asset, you're holding a much sought after in demand commodity with the potential for supply disruption.
Wow. I found the history on that fascinating, and equally fascinating hearing it again. So I love the way that you lay out that picture of what this is about. The other thing that you mentioned that I want you to elaborate on, if you will, is the vault, which you just sort of mentioned in passing, because that was also fascinating. Because when I think about, well, as you've explained, you're buying a tangible asset, but it was hard for me to wrap my brain around, what does that mean? I'm going to buy this and have it sitting in my house, So if you can explain that aspect of it, that would be great.
Yeah. No, that's you've touched on a very important point there as well, which leads as well into safety, security, right? So, like, why should you trust us, or how can you trust us, right? At this moment in time, no, because you don't know us. You have to get to do your due diligence, right? Now, what you will find is that I'm not a crazy Irish person in Tipperary who's going to buy metals in China and then we sell them to the US Department of Defense for fighter jets, right? If I was just a sales and marketing guy, albeit a bit of a crazy guy with that idea, there's red flags everywhere because I don't have any connection to the industry. So just before I mention the vault, the most important thing people should know about us is that our core business, this might sound like a contradiction, but our core business is not this investment play that we offer. That's our, as you guys in America like to say, that's our side hustle. But I'll tell you first, our core business is we're an industry supplier of rare earths. So on a daily basis, that's what 80% of our activities are, and that's what we've been doing for 30 years. So the business was founded in 1999, but we've been at it actually a bit longer. So if we weren't an industry supplier where we're buying raw materials directly from producers in China, and then we resell them to industry buyers in 70 different countries. We've over 2,000 buyers in 70 different countries. Now, if that wasn't our core business, we couldn't safely or responsibly offer the side hustle or the side business. So, how the side business came about and the vault that you mentioned, Michelle, is um, our industry buyers. Like a good example might be there might be a factory in Japan or in Germany or Liechtenstein who make medical devices. They've got 500 employees and they need a steady stream of indium. Now, they wouldn't have the capital to buy or in volume from producers, but at the same time they need a steady supply. So they basically asked us, our industry clients said, look, can any chance we can buy more and store them with you? So what we did in 2010, we bought a bunker in World War II. It survived World War II. If you look at photos of Frankfurt after World War II, it was just flat, nothing left. But this is one of the bunkers anyway that survived. So it was 2 levels below ground. We bought that, converted it to a fully, bank level secure vault, armed security, 2 meter inch walls. And we completed. We also built above ground as well. So we've 3 floors now. And so we began to offer our our industry clients the option to purchase, but also store. And then, we thought, well, why not offer private investors the same thing? Because we're in this unique position that we are an industry buyer. So we can offer like industrial grade, high value gallium or hafnium or indium. We know exactly what the industry wants. We can provide storage to our private investors and also to industry buyers. And then when a client wants to liquidate, we can mediate a sale to one of our industry buyers. And the only reason we can do that is because we're an industry supplier. If we weren't, it wouldn't be safe or, in any way smart to buy. Again, if this was just a sales and marketing thing, it just wouldn't work. It's not an industry you can just become a part of overnight.
Mm-hmm. Mm-hmm. Yeah, fascinating. So something that I think is just such an unknown. I mean, who knows that this is even going on out there? But yeah, so okay, so if you are interested in being a private investor, what does that look like? What is the turnaround with what you just explained? I mean, how does this work?
Okay. And sorry, I'll finish one thing with the vault as well. Our current stock there, we've over 200 metric tons or 200,000 kilos of rare earths in the inventory. It's the largest inventory of rare earths in the world anywhere outside of China.
Wow.
Just wanted to mention that as well. That's important. So the purchase process is very, very simple. Whether you're in Europe or, Europe and the US we have, friendly nation status amongst ourselves. So there's no, you don't need to be an accredited investor. Or minimum investment is only $10,000 or 10,000 euros, I should say. Some of our clients are, starting off with that and then use it like a savings plan and add, But generally, I usually sit with a client. There are 17 rare earths, only 10 are relevant as physical assets. The reason for that is the other 7, maybe, there's just plenty of supply, the China factor, not all, China doesn't dominate every single metal market.
Mm-hmm.
Hafnium, for example, is also made in Germany and France. But there's only 10 that are considered relevant as physical assets. And so I'd usually, a client can buy one metal if they want, or we suggest buy a stable base portfolio of all 10.
Mm-hmm.
That way you're invested in, there's not an industry you're not invested in, and you own the sort of downstream raw materials that ultimately become trillions of dollars in upstream GDP. So some of our clients, for example, like a particular industry, somebody might say, energy transition, what are the metals that are in electric cars, solar, wind? And then we'd say, okay, these are the 4 or 5 there, and they might buy those. Or somebody might say, well, what are the defense metals or the technology metals, But it's up to the client. We'll give them a little education on it, and then they can decide themselves that they want one metal or all 10, or it's really up to them, you know.
Mm-hmm.
But the purchase itself is very easy. We start with, let's say somebody said to me, I'd like to invest, say, $25,000, and I want, $2,500 of each metal, so 10 metals. So we send an offer to the client first. It's not non-binding. It's binding on our side, but not on the client side. And the offer shows, the purity levels, the case numbers, the chain of custody analysis reports, shows exactly what they're getting. And then they review the offer. Once they're happy with it, if they say yes, then we send an invoice. And that's it. The actual purchase can be completed in 3 to 4 working days. And now it does take another 30 to 60 days for the metals to come in. And then once they come in, we allocate them to the vault. And, the client has a sort of commercially paid invoice, certificate of ownership, and then a statement from the vault to show what's in their account, what's accredited to their account at the vault. And it's sort of that simple. And then the liquidation is exactly the same in reverse. If a client came, the great thing about them, Michelle, is they're highly liquid. They're extremely liquid. If somebody comes to us early in the day on a Monday morning and says, I want to liquidate X amount, we'll make an offer, we'll make an offer that day. And if they accept the offer, they'll sign a sales contract the same day, and it'll be signed, sealed, and delivered in 3 to 4 working days. So that's one of the benefits of owning rare earths. Is it's almost like a savings account, because you don't need to give us 30 days notice. If for whatever reason you want to maybe invest elsewhere, or you've made X amount, you can liquidate them very quickly.
And how do you are there easy ways to find out the value, or is it just on any at any given time period, or is it just sort of an offer being made at some point?
Well, I can help clients with, like, there's various different sort of portals, search engines where you can compare. I mean, check the pricing yourself. Mm-hmm. Kitco, I think, is Canadian company, but that'll be the North American probably equivalent. But no, once our clients purchase, we create for them a performance sheet, a portfolio sheet of specific to their purchase, and then we update that. It's up to the client. I mean, the prices, there's no exchange you can go to. The prices for rare earths are decided on a daily basis between producers and buyers. Mm-hmm. So they change daily, but we only update our prices on our website once a week, and we send out the performance sheet to our clients. It's up to them if they want it once a week, we'll do it, or once a month, or once a quarter. While we're on that subject, Michelle, we do suggest a sort of medium to long-term play. So, the idea is to make some money, give it some time, and we suggest a 3 to 5 year play.
Okay, interesting. So would you classify this as high risk, low risk?
Okay, so in terms of the business itself, like our company, it's as safe as any business can be, right? It's 30 years in business. We have an ISO 9001 quality management certificate consistently held since 2003, so for 20 years. It's 100% private, family-owned business, so people can look at assets, liability. So the structure of it, it's not just a business that was started 6 months ago, right, or it's well over 20 years in business. Very reputable in Europe, and it's not a business people can jump in and out of anyway. So that side is low risk, in terms of, as any business could be. I mean, who knows what the future might hold, but
right.
And then in terms of risk on the metals themselves, supply and demand are in charge. So I've given you a lot of the pros. Like here's some of the cons as well, right? So, I mentioned indium. You can swipe your phone because of indium. like it's possible a new technology, a better technology would come along for that in the next year or two, and therefore demand for indium might taper off. Um, luckily they have multiple applications and multiple uses. So, indium is not just used in smartphones. The other thing is, you know, China at the moment is threatening to ban exports of rare earths to the US, to Holland and Japan. There's some this It's a sort of retaliatory strike for, they're trying to block technology getting to China. So if something like that happens, the last time China did that was 2011, and they literally held on to rare earths, and we saw prices, really sort of, 5x in a space of a few months. So it can go both sides of it. Lately, the last few months, for the first time in a few years, the prices have been down for a number of reasons. One, China had been stockpiling for a while, and they seem to have stopped that for the moment. And just some demand from the industry itself just tapered off. So we actually, have seen some of the prices go down a little bit lately, although that's the first time in a few years. But generally, what we sort of try and suggest to people is the prices can be volatile in the short term. The market is not that transparent because also geopolitical strategies can affect it. Never mind, the common sort of denominator is demand is high and supply is limited, but there can be sort of strategic, political, geopolitical strategies at play as well that can affect things in the short term. But overall, in the 3 to 5 years, for example, if you'd purchased 5 years ago, you'd be up an average of about 34% a year in the last 5 years. If you'd purchased just 3 years ago, you'd be up 50% a year. So the last 3 years, the prices have been going up more. So even if there's been a sort of a price dip in those periods, over the long period, because the demand is so high, the trajectory, has been on. We haven't had a client lose any money. But what we like to say, Michelle, as well, to be just safe, is we like to sort of say to people, look at it as a good store of wealth and a good hedge of inflation. That's the sort of minimum results you'll get. But if you hold on to them long enough, you'll see decent profits as well.
Yeah, very interesting. And the idea, I'm assuming, is 3 to 5 years, because beyond 5 years, so much could change. You can't really predict. It's not like you would advise somebody necessarily to just hold on to it for 20 years, or would you?
We would actually, maybe 10, because, like, for example, the demand for energy transition metals is not set to peak until the 2040s, if it does at all. All cars are going electric, wind turbines in the North Sea, the west coast of Ireland here, solar energy, to be honest, there's not enough rare earths for that. It's not likely we can't meet those targets, I think. So the demand is definitely there. We like to say 3 to 5 years, just so people can get, be in a very comfortable position. Then it's not likely that they'll start to go down in value. They'll continue to go up, but it's just for people to be sort of in a profit situation, and then, and sit comfortably there. My own personal recommendation. I first bought 2017. I'm still buying, and I've no plans to sell. And I'll keep adding. I know the numbers. Like, for example, gallium, they're saying in Europe that by 2030, we'll be consuming somewhere between 7 to 26 times more gallium than we're currently consuming. Wow. It's not possible I'll just touch quickly on this as well. Rare earths are always a byproduct of another raw material. Gallium's a byproduct of aluminum mining. Hafnium's a byproduct of zirconium. Now, just to give you a good example, the ratio for hafnium to zirconium is 1 to 50. So for every 50 tons of zirconium mined or produced, there's only 1 ton of hafnium. Now, last year, hafnium went up 180% in 1 year. Why did that happen? It's because the it's needed in alloys in jet engines, also needed in rods for nuclear reactors. Hafnium can still operate under very, very, very high temperatures. It's also needed in rockets, aerospace industry. So what happened last year was we had the aviation industry sort of bounce back from COVID with massive, new orders coming in for jets. Nuclear industry actually is also increasing, and then this what you call space exploration is becoming a fully fledged space industry. So we had this demand for hafnium very quickly, but because you can only get one ton of hafnium for every 50 tons of zirconium, the zirconium industry is not going to produce more just because there's a short-term demand increase for hafnium. So these are the sort of dynamics that are at play there. You can't just increase the supply of rare earths because they're always a byproduct of another raw material. And that's why they're sort of complicated and expensive, is they have to be extracted, they have to be separated, and they have to be refined. And the only place in the world right now that's doing 90% of that is China. And China's just way, way ahead of the rest of us, So, there's geopolitical strategy, there's supply demand, there's supply disruption. It's just very interesting alternative asset class right now.
Yeah, I continue to find it fascinating, especially because we're building our future on, medical devices and things and transportation, components that we have such a hard time actually getting. So, I mean, that's a simplistic way of putting it, but it's still fascinating to me.
Yeah, well, as well, Michelle, like we talk about energy transition, but the truth of it is, we're going through it. What you call it's always technology transition. For example, when we went from walking to a horse, the horse was the new technology. And then we went to cars, that was the new technology. Books, when we started to read books, that's a new technology. And these rare earths are, as I said already, they're the backbone of manufacturing in this 21st century. They haven't always been available as an asset class, but if they were, and as intrinsic and relevant as they are today, everybody would have them in their portfolio. Mm-hmm. They only became interesting in the 80s. They were first sort of, they were discovered like a long time ago, but the first usage of rare earths was in color TV, when we started to use color TVs in the 60s. And that was all there were really applied applications until the 1980s. And I think I said to you when we first met that the premier of China at that time, Deng Xiaoping, was standing on a rare earth mine in 1987. And he made a very shrewd statement and prediction. He said, and you can Google it, you'll see, he said, the Middle East has oil, China has rare earths. And this was just before the revolution of technology took off. They saw what was coming, and they just, China did what China does, They said, we're going to, over this next 25 years, we're going to become the dominant market leader in this technology. And they are. I mean, the war's over. China's already won. It's done. Now, not to say that Europe and the US cannot produce, but it'll take 10 or 15 years. They've got to get the engineering expertise. They've got to get the human capital. And also, Europe and the US, labor costs are more, they'll do it more sustainably, which will also cost more. So no matter what way, prices are going to continue to rise, which is good news for investors.
Wow. So interesting. And so if you were to compare it with something that we can relate to a bit more, like gold and silver, I mean, how do you compare that?
Well, it's funny, this might sound like an exaggeration, and it is a little bit, Michelle, and I'm Irish and I'm a man, so we're prone to exaggeration, right? So if all the gold in the world disappeared tomorrow, and again, I'm exaggerating a little bit, it wouldn't make a big difference. What I mean by that is, gold has more of an extrinsic perceived value. People purchase gold as a store of wealth. Yes, there's some in your smartphone and it does have some industrial uses, but primarily the market cap of gold is because people are using it as a store of wealth. Rare earths have an intrinsic value. And, proof in point is, rare earths outperform gold every year, for the last 10 years. Even so far this year, gold has gone up a bit and some of the rare earth prices have gone down. If you look at a 3 or a 5 year graph, still, outperforming gold and silver. So, I, wouldn't say one is better than the other, but definitely if you have gold and silver in your portfolio, or maybe if you don't because you don't see a huge value, rare earths are the alternative to that because a lot of people don't see the sense. Well, why would I have metals at home? And sometimes gold doesn't really go up. There's a period from the 1980s that didn't really go up in value at all for about 20 years. So they're a nice alternative to that because they have a value. They're in huge demand. Every country in the world needs them, and the supply chain is limited and also subject to disruption. But I wouldn't say one over the other because it's not for me to say. But definitely, they could sit alongside gold and silver in a portfolio.
Yeah, fascinating. Okay. Well, this has been so interesting. If people are finding this interesting, as I did, what would be a next step to talk to you about this?
Okay, they could email me, Louis, Louis, at strategicmetalsinvest.com and mention the show and Michelle. Or alternatively, just go to the website. It's Strategic Metals Invest. They can download a brochure. We do get people. I just had somebody recently over from New York to visit the vault, but barring that, I can give some people some good avenues for due diligence, like independent of us, how they can sort of, find out who we are and get all the information they need. But I'll be happy to talk to anybody. Yeah.
Yeah, very nice. So, yeah, so you have it set up so that people can kind of verify the credibility of everything and I guess even take a look at where the metals are stored if they wanted to. That's interesting.
Yeah, well, I'll touch on that very quickly. I mean, look, as I said, the vault has 200,000 kilos of rare earths or over 200 metric tons, right? I mean, it's a sight to behold, nothing better than touch it, see it, feel it. But not everybody can make the trip over. It's very inexpensive these days, and you can, we're Frankfurt's near the Weinstraße, which is the Rhine River and the vineyard, so we'll make a few days of it. But barring that, I found a very inexpensive way for US clients to do due diligence. And one, if you go to an attorney, they'll charge you an arm and a leg usually, especially something overseas. But US attorneys and European, solicitors or attorneys, if they need to do diligence, they go to there's portals and search engines they can use. In the US, there's one called Red Flag Group, and then I think they were bought recently by Refinitiv. So these are portals that if I wanted to do due diligence on a company in California, these guys have all the information, right? The equivalent of Red Flag Group in Europe, there's a few of them, but one is called North Data. People can go there. It's in English as well as French and Italian and German. But North Data is a portal for people to do due diligence on a business in Germany or Ireland or England. And all of the information you need it's out there in the public domain, but it might be in 15 or 20 different platforms. And these portals have them all together. So you can look at tax returns, right to the very, very beginning, annual statements, assets, liabilities. Have they had any bankruptcies? Do they have any patents? So you can get everything you need to know through these portals for it's €49, $50 a month for the premium package, which gives you everything. It's free, but there's some information free, but if you really want to find out everything, you pay 50 a month and you only need it for a month anyway. So that's North Data. Then there's one that's for European companies. Then there's another one called Bundesanzeiger.de, which is for German companies, again in English. This one's connected to the Ministry of Justice in Germany, so all the information is fully sort of authenticated. So that type of thing, I can give people some search engines they can go to. They can maybe, like, it only costs $50 if you're, halfway decent around a computer. But if you went to an attorney, like, they'll pay that $50 and maybe charge the client 500 or 1,000. You can do it yourself, But I can point them in the right direction there.
Yeah. Yeah. Do you find that that's the position you're in a lot, trying to help people to just be comfortable with it because it's so different?
Yeah, well, it's the first, maybe it's just in my own mind, but I'm thinking, if I was in the US, or even, if I'm in Europe and the first thing I want to know is, with certainty, everything I need to know, that, the business is, 20 years old. There is a vault in Frankfurt, and, annual statements and assets and liabilities. So I think, it needs the first question that needs to be answered and then for people to feel comfortable,
Yeah, yeah. Well, this is fascinating, and I don't know what any of the potential tax implications or anything else might be. So that, there's still a lot of interesting questions to ask.
Well, look, you can take tax advice from an Irishman in Tipperary, Michelle. So
I won't.
Wouldn't be a good idea. But what I can tell you from the European standpoint is the vault in Frankfurt is a duty-free zone, so it's exactly the same as Switzerland or Singapore. So although the goods are in Europe, they haven't entered Europe from a tax perspective. And if the investor buys them and holds them for a minimum of a year, then there's no taxes on the purchase or the sale. So they can be tax-free in that respect, but I'm just speaking about the European jurisdiction. Now, what I have been told by one of my clients, a US citizen, and somebody, if they want to verify this, they could talk to their tax advisor. But what I have been told is that US citizens don't have to report foreign-held commodities, whether that's timber or metals. If they have money in a foreign bank account, they have to report that. But apparently they don't need to report timber or metals or any other commodities if they're stored overseas. However, upon the liquidation of said commodities, then they have to they have to report the gain. Mm-hmm. And there's, obviously probably capital gains then on the next tax return. So that's what I've been reliably informed anyway.
Interesting. Wow. Well, this has been great. Thank you so much for talking to me and the opportunity for people to learn about this. I think it's really unique, really different, and I'm so happy that you were able to explain everything so well too. Made it very intriguing.
Thanks, Michelle.
Yeah.
Thank you very much. So, I hope I did, or I hope the accent wasn't too much. And it's really, it is a simple, same paradigm as buying gold and silver, but because they're industrial metals and liquidation, there's a few finer dynamics that have to be sort of explained, and I hope I was able to explain exactly. I mean, it is quite simple, but there's for safety, security, there's things you need to know when you're buying industrial grade metals, and that you've got to be able to liquidate them. As you said earlier, quite rightly, there's no point in me or you having any amount of gallium or hafnium in a safe or out the backyard or the garden, because who's going to buy it,
Yeah.
So that stuff needs to be understood, and we run through everything with the clients, make sure they know exactly what the story is.
Well, thank you, and I'll make sure to put everything I can in the show notes so people can reach out to you. And the accent was great, by the way. I personally really enjoyed it. So yeah, thank you. And listeners, I hope that this was new and fresh for you and something that you can start thinking about for yourself, and really got me thinking. So thank you for listening. Thank you for being here. You can find the Money and You Show on all the platforms that podcasts are found, as well as the Limit Free Life YouTube channel, Roku channel, and some other places. We'll go ahead and get those show notes put together so that you know where to follow up with Louie. And thanks for being here. We'll see you next week.